Hello and welcome. You're watching special conversation on the budget day. I have with me a very special guest, Mr. Sundeep Sikka, Executive Director and Chief Executive Officer, Nippon Life India Asset Management Company. Very good afternoon, Mr. Sikka. Budget has been presented and it seems that capital expenditure has been a focus and the budget seems to be growth oriented. What is your first take on the budget and how would you rate it?
Hi, Gitu. I think thanks for having me. I think it's a really good budget. I think it's a broad-based, inclusive budget focused both on growth and providing support to the certain sections of the economy which were impacted by COVID.
Mhm.
I think I take it as a focus is on the big picture rather than just on one sector, and the direction is very good. So I think I take it as a very good budget, and I think this is one of those budgets where I think it's not just about what is going to happen in the next 1 year, but it lays the roadmap for the next 5 to 10 years.
Mhm. Last budget, we saw some re-rating for the sectors because it was again the capital intensive budget. What is expected this time? How do you expect this to play out for the corporates and as in the sense, and also we have been talking about boosting consumption and creation of jobs. Does this budget address all that?
No, I think clearly I see this budget addressing both the things. I think firstly, as far as the spending is concerned and the capex, and then I think taking into the social account and the job creation. So let me take you through a couple of things. I think as we were getting into the budget, the government had ample resources thanks to the bond tax collection. The GST numbers have been all-time high. And due to the pandemic and other factors, the government couldn't spend enough on areas like infra capex despite ample resources. Now there is also no burden of past dues, fertilizer subsidy of FCI is all clear, all bonds issued. So then going forward, FY23 revenue growth is likely to be strong. Progress and national monetization through disinvestment should help. I think this time, I think it's the first time we have seen the disinvestment number also 65,000. It's not an ambitious number. It looks to be, it gives a feeling earlier it used to be balancing figure. This time it's a more realistic figure. And after seeing what has happened in Air India, this seems to be an achievable number. And also, the budget delivered the big time on capex. The capex increased by 34% to 7.5 lakhs. The PM Gati master plan takes care of the highways, the cargo, and a lot of hydro projects. So I think clearly from a capex point of view, the government has done great. At the same time, government was also expected to provide support to certain sections of the economy. 80 lakh houses under the PM Awas Yojana, 60,000 crores to cover 3.85 households for tap water, and a lot of social initiatives which are also going to lead to more investments, infrastructure, and job creations. So I think we saw on both the fronts, whether it's in spending as well as impacting the employment, creating opportunities, touching the social factors. I think the government has done it all. So I think I clearly see, especially the fiscal deficit. Also, the estimate is at 6.4 for FY23. But I think the more important thing is that directionally, it has given a direction of 4.5% by FY26. So I would call it a broad-based growth-oriented budget, and but also a very balanced budget. I think I would rate it as one of the most balanced budget in recent times.
Mhm. Increased borrowing, which has led to some kind of a hardening of yields of 10-year benchmark to 6.8%. How do you see this auguring?
I think it's this was in the making. I mean, there's nothing new. I think many times bond markets have reacted too fast to it. I think today it's gone up by 20 basis point. But I think we see it stabilizing at this point of time. I think we all knew we were headed for a increase in interest rates scenario. But I think there is definitely going to be a more fiscal discipline. And broadly, I think the worst is behind us. I think we'll have to live with this regime. I think the interest rates are going to be a little higher compared to past. But I think I don't see that as a very big concern.
Mhm. Mr. Sikka, which are the three sectors that you would really see, leading the growth as we are talking about India going forward post the budget announcements?
No, I think let me, I think first is going to be infrastructure. I think anything to do with infrastructure, cement, steel, everything is going to, I think clearly the government has come up with a very strong initiative, a directional approach of spending, whether it's to do with the highways, cargo terminals, almost 130 megawatt of hydro and 27 megawatt of solar plants projects, the 400, sorry, Vande Bharat trains. So I think clearly infrastructure is going to be the theme, and anything related to infrastructure, I think we see that as a big boost. I think after that, also the financial sector. I think the one big thing that has got lost in this, a lot of announcements. I think how do you leverage the post offices for banking? Now, the kind of financial inclusion that can happen because of this is something that many of us may not be able to visualize. We have seen what the Japan Post has been able to achieve, the financial inclusion, and Nippon Life being a Japanese company, I can touch a little more, I think what has happened there. So I think clearly I see that as a very big opportunity as the financial inclusion goes up. And also the other thing that I think I clearly see is the gift city announcements about government promoting gift city. Clearly see a lot of foreign flow money coming into India. So I think overall, I think anything to do with the real estate infrastructure, real estate consumption, and financial inclusion. I think these are some of the topics for us.
Mhm. Mr. Sikka, if we talk about the past 2 year crisis, MSMEs have been hard hit. Now, the extension of ECLGS scheme for until FY23. Uh, so, does it really going to help them?
Definitely. See, I think what we have to understand, I think a lot of these things, steps and measures which were taken, I think during the COVID period, I think there was a slowdown. I think the operations were disrupted. I think what we have to see is, I think it is these reliefs are good in short term, but I think the bigger thing as the economy grows, the MSMEs definitely will do well. So I think today this emergency credit line, scheme which is going to has been extended is positive. But I think the bigger positive is not the scheme getting extended. The bigger positive is I think we clearly see economy bouncing back, and I think the kind of I think we post COVID, especially after the wave three, also the bounce back has been so fast. So clearly, I think directionally, and that's what I said, I think I'm not trying to focus, as I mentioned in my earlier thing. This budget is not about one sector, it's a big picture. And directionally, I think we're in the right direction.
Mm-hmm. Nominal GDP growth estimated for FY23 is somewhere around 11 that the government is saying. Aren't you seeing it too conservative?
I think it's always good to be conservative and deliver more.
Okay. Let's talk about some of the new age, sectors getting a boost from the budget. Your drones, then your gaming sector is also seeing some kind of an inflow. How do you see this really occurring for the new age companies and our startup ecosystem?
No, I think clearly, I think India is going through a very interesting change. I think while we have a lot of traditional companies and industries doing well, a lot of PLS schemes are going to help in the manufacturing. But the big change is also happening in the new generation companies. You talked about gaming, digital, and so many of them have gone public. I think as a mutual fund, I will not be able to talk about individual stocks, but I think from our perspective, we clearly see there's going to be a lot of value creation that is going to get created by a lot of new sectors. And this is exactly what I said. There are going to be many opportunities which we can't even visualize at this point of time. So I think the gaming is something, about 10 years back, if somebody had told you there can be a gaming company which is about a $10 billion market cap, I think it will be difficult to believe. You think it is just a game, it's a hobby, but I think things are changing. So clearly, I think and India is becoming the unicorn in the fintech, the startup capital of the world, I think especially of the East. And clearly, with the kind of more than 71 unicorns which they have come out in the last year, the numbers are going to just increase. And what government has been doing, I think, as we saw, 16th of Jan, which was declared by Prime Minister Modi as a startup day. There's a lot of focus and thrust on the new startup, new digital, new companies which were not existing. And clearly, I think we see, I think India has great entrepreneurship with the formalization of everything, and especially also getting an access to capital markets. It's going to be an interesting case of a lot more household saving money and institutional money coming into these new sectors, which have the potential but never got the funding. So I'm pretty excited, and I think from our perspective, we see these are few themes you cannot ignore. I think everybody can have a view whether to participate in it or not, but I think you can't ignore them.
Talking about the income tax for individuals, nothing has been done on that front. How do you see that?
I think we continue our duty to pay tax for the growth of the company. That's it.
It's because the theme has been focusing on increasing consumption, but the consumption would only be increased if people have money to spend, right? So it was.
But cutting taxes is also not always the solution. I think ultimately the government also, like any household, you have to manage both the inflow and the outflow. I'm sure. I think the solution to this in long term is going to lie to have a broader base of taxpayers rather than just tinkering with the tax rates all the time. So I'm sure directionally we'll come to a point where the taxpayer base has to double or triple from here, because at this point of time also the number of taxpayers are very limited in India. And as consumption goes in, direct tax is going to play a far bigger role. But I think I personally feel we're still a little far away from that.
Digital rupee to be rolled out by 2023, cryptocurrencies to be taxed at 30%. How do you see that?
No, that tells you how India is changing. I think we have all seen, I think the change happened. Earlier, you used to see the finance minister coming with a briefcase for the budget. Now it's with a laptop. So I think that talks a lot about how India is progressing, how we see future. I think digital rupee, I think, is a great initiative. And I think that specifically on the crypto being taxed, I think it's a good thing. I mean, you can't have an asset class. Uh, there was so much uncertainty whether it's going to be legal, not legal. I think we need to wait for the fine print. But I take it as a positive. I think the fact that it's going to be taxed, I think tax is never a problem. I think the more important thing is, I think how do you legitimize things? People make more money. I think I am a firm believer. Let the economy grow. Let people make more money and let them pay more taxes.
Mm-hmm. How do you expect the markets to behave here on, sir?
I think again what we have seen in past, the first one it takes a week to digest the budget, and many times what happens is I think today also we have seen a big swing, and I think and that's also happens because there's a build up. The market ran up 800 points in the last 1 week. So I think what we have realized, and I think what we advise, we have nearly about 1 crore investors, retail investors. We advise them. I think budgets are directional, is a directional statement. I think one should not read anything more than that. I think that you start investing, you stop investing, you start trading. I think these are directional approach. I remain a perpetual bull. I think I'm very bullish. After the budget today, that India as a country will do well. I think we are from the growth perspective, GDP growth perspective, we are already one of the fastest growing, and there's nothing can stop us from being in the top three in the world. As far as the stock markets are concerned, stock markets are a function of what happens to the economy. And as far as the economy is concerned, I think we are clearly moving upward and moving strong, getting stronger. So I think what happens to the markets in the next 1 week, 10 days, nobody can comment. But directionally, we're in the right direction.
Mm-hmm. All these assumptions have been made on a crude between 70 to 75, but now we have crude around $90 per barrel, and then inflation surging globally, and India is not far behind. So can these two factors really play a spoil sport?
Yeah, I'm not an expert in oil. I think we need to clearly. I think we have seen the worst. I think when the oil was above $114, I think we have survived that. I think today the good thing is, I take it as a positive. There was a time we were only importer of oil. Today we export more software services than we import oil. So I think from a currency point of view, it gets hedged. So I think. Like I said, I think we should not worry about things which are not in our control, but financial prudence is critical. And I think the government has done everything that it could do. And we need to keep an eye on what's happening to the global oil prices. But I think we can't be slave of, because ultimately we can't do much.
Mm-hmm. Thank you, Mr. Sikka, for your time. It was a pleasure speaking with you. Thank you so much.
Thank you, Geeta. Thank you.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.